Today, ladies and gentlemen, some serious updates on how I'm managing my six-figure dividend portfolio, currently worth $112,000, dripping $4,800 in dividends as of this very moment, and I got $10,000 in cash, and I'm going to show you what I'm going to be doing with all of it. So let's jump ready. Welcome back, my passive income investors alike. Today is a big day. Today we just got through earnings season. I've been moving tens of thousands of dollars around, and currently, even with where my drip sits, I've got a ton of capital sitting on the sidelines right now, waiting to be remanaged. And I'm going to show you what we're going to do with all of this inside my actual portfolio when we head over to my computer in a second. But I want to tell you why I am doing all of this, and it is all for my financial independence, retire early journey, baby. And I'm here to show it to you in hopes that you guys are going to try and get on the same path and find a way to enjoy your time and spend more time being free. That is the point of all of this. Now, I've been mitigating my stocks around because I've been over leveraged in things like Apple and a few other stocks, and I've decided that I want to do a few acquisitions of maybe some companies, and I'm going to show you how I plan on remanaging everything, because the next few months is going to be an utter nightmare, and I think this is going to be a lot of fun. So come over to my computer, guys. We're going to check all of this out, and I'm literally going to break this down for you, every position, stock by stock. Come on, guys. All right, welcome into the tax-free savings account. We have a whopping 3 accounts we're going to look through, and then I'm going to show you how I'm going to buy a business, something I've mentioned before. Man, oh man, we got some big news today, baby. We're talking things on buyout, we're talking Apple, we're talking sin stocks, we're talking moving tens of thousands of dollars, which does not happen often, and I'm doing this all in the journey of making more dividends, saving money, and not being too risky, especially with the kind of risk I'm about to take. So let's start off with the big news, which is, well, Apple smashed earnings, which I mean is more apparent than anything. And I got unlucky and lucky with this one because I bought, or let's start with the selling of what I did. I keep telling you guys I was going to leverage down on Apple, and I brought it down to the same size position as I have in Microsoft. I want to keep them equal positions because at one point in time here, Apple made up 20% of my entire portfolio, and I sold Apple, not at the highs. I wish I sold at 220 today, but I figured I'd get out sometime between 210 and 220, and I sold right out at. I would show you the sell order, but because it's in my email and I can't open it up separately, there's too much personal details in there. But 47, oh, that's not the right one. We'll get to that one in a sec. Don't worry. Don't you worry. But we're talking $217.62 is what I sold off in Apple at the share price of $217. And I sold about $6,000 worth, in which I used a little bit of it to open up a starting position in my tax-free savings account in MO, which is down slightly. But as we can see, I got out in the macro idea of it. If you're looking day to day, which I'm not, we can see that I actually got out at a fairly healthy price, considering it came down a little bit, but who cares about that? It could be back up tomorrow. Whatever, right? Doesn't really matter. Now, British American Tobacco is one I've been bragging about, earnings that are coming out, and this is going to be very important. This will be the one that I'll be paying most attention to. But let's talk about, you can see how much I purchased MO for, by the way. This tobacco company, I picked it up at $47.84, and the market value has dropped even more since then, but it just came out with earnings. British American Tobacco comes out tomorrow with earnings, which I'm super pumped for. But I'm going to be buying more of these over time, and I actually took some dividends. I got about $500 in dividends that I used to buy some GEO group today. It hit a crazy bottom, actually. If I can show you the charting on this, you might be kind of shocked by the insanity of it. This one-day chart's pretty wild because it popped up, and I felt like it was holding pretty strong, so I picked some shares up literally during this pop because I'm afraid it's coming back, and I would hate myself if I can't get shares this cheap, especially after how good its earnings were. But I picked GEO up. Where's the earnings there for it? At $17.59 today, and it popped over 18 for a while and then came back down, and if it stays in this area, I will continue to buy more as dividends come in. But more importantly, that is what I'm trying to do with this tax-free savings account, is increase the dividends, make everything even between Canadian and U.S. stocks. Over time, I'm going to be selling my bank shares when they start coming back to mitigate into some other Canadian stocks. We have a 50-50 split, and it currently gives me $4,470 in U.S. dollars sitting on the side. Well, total Canadian, but we've got about 3,300 U.S. sitting on the sidelines waiting to be interjected when I feel it is acceptable. And I don't care about you, Java. You're in my way. But let's look at the dividends for this account before we go over the other accounts. We're looking at a really healthy income for August. Well, this month was the best. We were over $500 in dividends. But coming up August, we're going to get $50 in Canadian, $90 in US, just in this one account. And as I begin to move that money around, I sold that at Apple. We're going to see the dividends skyrocket in this account, which is great because they are tax-free dividends. And I think I only pay a little bit of withholding tax, 15% on the US, but I'm trying to divide everything up so it's 50-50. I don't want to be too picky because I'm not psychic. and I don't know what's going to perform the best, so I'd rather even it out with just the companies that I enjoy, because this account's only goal isn't to make equity, it's just to make cash flow. I just want the money to come out of this in case I need to use it. So these dividends mean a lot to me. So I'm going to focus on keeping these in control. And moving on to the account that I have to manage. Actually, before I talk about the managed account, because that's going to be the most important account, because this is where most of my management skills come into play, even though it looks like I'm down. By the way, it looks like I'm down more than I am because I've been taking profit out on companies. Same with this account. This account was actually up $5,000, but I took a bunch of profit out of Apple. So you're going to see the percentages start changing. But and let's move into the RSP real quick before I break down the crazy account for you, because the crazy account is the account that I'll explain more about in a sec. But more importantly, my RSP. You use this account to defer income. I absolutely hate this account. It is a retirement account I can't do anything with without getting penalized until I'm 65. But I'm not an idiot, and I am going to be a first-time home buyer, so I'm going to use this account to defer my income today to buy a house about 2 years from now, or a year and a half from now, when I start figuring out everything and getting my cash flows up. But in the meantime, I'm going to put it in the safest stocks imaginable, including the Vanguard 500 index fund. I actually met a guy on the weekend that works for this company. It's kind of an interesting conversation. But this is one of the safest companies you could ever put your money into, and it's where I'm going to hold this for a year and a half in case I have to pull it out at some point. I want to make sure I'm not going to be taking on too much risk, because I don't want to sell this at a loss if I can avoid it. And this account currently drips me only about $68, but it is better than nothing. Let's be real. So moving into my final account that I'm going to break down for you guys, this is where I'm holding stocks that I really, really love, that I want to hold on to, and I'm going to start mitigating them into my tax-free savings account over time, as I am allowed to contribute to it once a year and the dividends come in. And I'm just waiting for, like I said, British American Tobacco to come out with earnings. I'm going to sell off most of this and finish up buying more shares of it in my tax-free savings account. And I'm going to add to this position of cash that I have here, which is 5,638 Canadian, which I'm going to use to put on a down payment or put into a holding account until I decide to make a decision over the next few months on what kind of business I am going to purchase, which I will explain more about in a second. So this is all, first of all, money that I have to pay tax on. This is money that I've contributed to my account over this year, and I do have to pay tax on all of this. So I won't have to pay tax if I use it to buy a business that relates to the business I am running. And I want to start a few businesses over the next 2 years. I'm going to do 3 different online businesses, 2 of which I'm starting. One of them is this YouTube channel. One is a mystery. I'm not going to tell you about that one yet. And the third one is going to be one that I buy. And I'm going to try and do this safely, slowly, and as patiently as I can. But for me to even start looking at the businesses I want to buy, I need a deposit. So if you guys don't know what Empire Flippers are, it is the most professional, safest business when it comes to trading actual real life businesses that require low maintenance, but have a high rate of return. The rate of return on these companies is absolutely insane, and it's because people don't really understand how online businesses work. And the fact of the matter is I've been educating myself immensely on these, and because I know how to start these and I actually understand how it all works, let's just take an example. Or a month. Sorry, let me reiterate that. A month. The income is bi-monthly, and the total price on this business, and this is office supplies and travel, okay? This business makes you literally a 6-figure income a year. Okay, if this page will load, is that going to open for me? Is it lagging out? Let's get this open here. Let's get this open. So look, it's trading at a 28x multiple from the monthly revenue. Its monthly revenues are $65,000 with a net monthly profit of $26,000, and they want to sell it for $740,000. And over its lifetime, we can see it's been doing pretty on average income. It's been very healthy and stable. It requires 2 to 3 hours worth of work per week. And this has been around since 2016. And these are the kind of businesses that I'm looking at to buy to add to my portfolio because I understand how online businesses work and most people don't. And this has a high barrier to entry because of the education factor behind it. But I think I know what I'm doing. And you can stick along for my passive income journey to see whether I'm going to lose or make money on any of the decisions that I make. This is a very big step to getting me out of the rat race. And I think it starts right here. And I'm hoping you guys will be all along for the journey. And I want to be part of yours too. So comment in the comment section below. Let me know if I missed anything, if I'm being an idiot about something, or I just don't understand what I'm doing. I'd love to hear your opinion or what you are doing and buying and trading. Would really make my day. So stay cool, stay awesome, guys. I look forward to chatting to you real soon.